I need your help. I can't tell you what it is. You can never ask me about it later, and we're gonna hurt some people.
Whose car are we gonna take?
GameStop stock up over 60% today from our yesterday's video. AMC stock up over 23% just today. The short squeeze has officially begun, and AMC has broken the trend, and the chart is pretty much screaming bullish right to all-time highs. In this video, I want to take a look at the price action and the full technical analysis of both AMC and GameStop. In yesterday's video, we went over the setup, but today we got the confirmation, and now we are ready to just go off and shoot to all-time highs. In this video, I also want to talk about Tesla stock. Towards the end of the video, I'm going to be talking about Tesla stock, an option setup that I am looking at to enter in the Discord. So if you have not already, make sure to join the Discord, link in the description. We have been absolutely killing it, and Tesla stock is definitely setting up. I also have, I made a podcast today with a former hedge fund manager, and if you are not aware of the short squeeze that is going on with AMC and GameStop, he will really explain it in depth towards the end of the video. It's going to be around 10 minutes, so this video is going to be pretty long. You guys can watch it in 2x speed, but let's get started with AMC. So today we saw that massive move. After hours, we're up 22%, and that is when really we get the big moves. It's during usually after hours or pre-market. We're talking about these massive gap ups, or if we take a look at our previous squeeze for AMC and GameStops, we gap up overnight. So for example here, with AMC a while ago, it gapped up a whole, we're talking about like 200%. It gapped up. So right now we are going to for sure gap up. We're already up 23%, 11% for AMC and GameStop. So we should definitely see a lot of price action during pre-market. So that is one thing to keep in mind, of that we are going to for sure gap up. And last time we were gapping up 200%, 100%. Now we're taking a look at AMC stock. The question is, when is our price target? Okay, when is our next level of resistance? And the crazy part is, the only resistance we have is all-time highs. Like, take a look at this chart. Where is our resistance? Our only resistance is all-time highs, and we're talking about at least a 100% gain. So this is our most conservative price target for AMC. If you entered in yesterday, from yesterday's video, no reason to worry about. Your stop loss should be at break even now. So pretty much our price target is $11.90. If you want to start taking in profits, this would be the area for AMC stock. Now take a look at the volume. The volume looks amazing. What volume tells us is how many people are buying and selling, how much activity is in this stock. And that matters a lot, because that is how we get these exponential moves, when we have a lot of trading activity. So with AMC, we got the volume and we got the chart, which just looks absolutely beautiful. It's just squeezing right here. We closed above, so we have officially broken the trend for AMC, and $12 is our price target. So we might see a 100% gainer tomorrow for AMC. Let's talk about GameStop stock. Okay, GameStop stock looks even better. It is moving a lot more. GameStop stock had the same setup just like AMC. So again, we talked about in our yesterday's video that AMC was lagging behind. Now GameStop is forming this cup. Okay, we also have the volume, which absolutely looks amazing. Now the crazy part is we have the same amount of volume or even more from the time that Roaring Kitty tweeted. So this volume is huge because we have more trading activity from the time that Roaring Kitty tweeted. So that tells us a lot. We can get a bigger move right here. Price target $63, $64. This is our high. So this is our previous high. So again, we're basically already at that level. Okay, we're basically already at that level. So our next price target is pretty much going to be all-time highs. Like all-time highs is right around the corner. Like after this price target, which we have pretty much already hit. So this price target, this resistance is going back all the way here. You know, this is going to be our next level of resistance. But pretty much after $63, we have $85, and we have $119. And keep in mind, these are pre-split levels. So one time GameStop even hit $1,000 per share. So this is absolutely incredible. And the chart looks beautiful because this is a solid cup and handle setup. So we have this arc going on where we are trading sideways. We were trading sideways. Now we have this formation of a cup and handle, and now we are looking to break out of this handle. So this chart for GameStop looks absolutely amazing. So this is what we have for GameStop and AMC. Pretty much just all going all-time highs. We're going to gap up. If you entered in, congratulations. Now I want to talk about just a quick play on Tesla that I'm watching. I'm gonna send the buy and sell alerts on Discord. But after this, there's gonna be a podcast. It's going to be around 9 minutes long with the former hedge fund managers. I've talked to this guy and asked for his opinion and his thoughts, and it's very, very interesting. So I just want to talk about Tesla, and then you guys can hear the podcast. But Tesla stock is setting up with a very nice symmetrical triangle. Really reminds me of the setup on Nike. Nike had this symmetrical triangle. We entered in. We had a very nice. These contracts are up over 250% now. But beautiful setup on Nike, and Tesla is really following along with that. Now, just like Nike, with Tesla, what I'm watching is for it to trade more sideways and to get tighter. Because remember when we entered in at the level of support for Nike, but we were waiting a while for it to break out because it was trading sideways. So this is what I'm taking a look at Tesla. I'll keep you guys updated on the Discord if you have not already. Make sure to join the Discord, link in the description, live buy and sell alerts. We have a small account challenge and all of that. Now I'm going to have the former hedge fund manager talking about the AMC and GameStop short squeeze potential.
So starting with the history, this has been going on for over 3 years. I mean, this really got started in mid-2020 and led to the massive run-up that we saw in January 2021. It was a run-up like we've never seen before in the American stock market. Tons of controversy. And the price of GME, I'm going to refer to post-split numbers, went on a run-up to above $80. Now, that was a huge rally. I think we all know what happened after that. The buy button was turned off. The media said that the hedge funds had closed their positions. There was a SEC hearing, and the media said the squeeze is over. That was the squeeze, done and dusted. Classic tale of retail investors bought in high at the top of the run-up, and then the price crashed down significantly and traded sideways for about 6 months. Now, that could have been that could have been the story could have ended there, but people started to spot holes in the story that had been pushed out about hedge funds closing, because in June, on no news essentially, GME and AMC went on a massive run. That's in June 2021. And it almost got to the same levels of the highs of January. So then people were like, well, if the hedge funds are closed, how are these stocks moving on no news? What is it that's causing these cyclical run-ups in price. Now, if you have a look at the charts for GameStop AMC and you get it on a maxed out view since 2021, like a yearly view, you'll see that whilst it has been in a decreasing overall descending pattern, within that pattern, a 3-year bull flag is forming, and you'll see that every couple of months or so, there's a massive run-up and then followed by a sharp decrease. Just on no news, not tied to any fundamentals whatsoever. If you actually look at the earning calls and the price action of both stocks, they tend to perform badly when the earning calls come in, and that's because essentially the hedge funds that went short on this in 2020 did not close out their positions in January 2021. They essentially kicked the can down the road using complex share swapping deals, derivatives, heavy manipulation, illegal practices, and naked shorting. They doubled down. You could probably say they quadrupled down on their short position. And the game they played was, right, we're going to kick this can down the road. If it takes 3 years, it takes 3 years, but we're going to essentially bore retail out of this trade and make them think that it's over. And you know, I'm not glossing over this lightly. The last 3 years, the retail investors that have held on to this truly deserve praise because they've been ridiculed, they've been constantly blasted by the media. I mean, the interesting thing is, for 3 years, if this player is dead, why is there a weekly, sometimes daily news article from various, news sources, like Market Watch is usually right at the top of that pile, saying that sell GME, sell AMC, it's over. Since when have these financial media outlets been interested in you when you're losing money? They tell you what to buy, but why repeatedly tell you what to sell? And that, me and many other retail investors have seen that as, well, something's still going on here. If someone wants to get me to get rid of my shares, what's the vested interest that they have? And their vested interest is that they're heavily shorted on this position, and any run-up in price extremely exposes them to infinite risk. Now, I'm sure, this audience will be aware of, the practice of shorting, but essentially, when you short a stock, it means that you borrow shares, and if the stock goes down in price, happy days, you're making a ton of money. If the stock goes up, you're essentially having to buy those shares back at the current cost, which is setting up for a big loss. Now, that's okay if you exit your position, but we're talking about hedge funds now that have increased their short position, and they've constantly used this shorting practice to keep the price down. Through naked shorting and illegal manipulation, there's plenty of videos out there that will go into this in more depth, but that's not the purpose of this walkthrough today. This walkthrough is going to be mainly focusing briefly on the history, but where are we right now and what are the next catalysts? So with the shorting that's gone on, essentially it's led us to where we are now. We've had another run-up a couple of weeks ago when Roaring Kitty started tweeting again. So he started tweeting every day. I think it was for around 2 weeks. But interestingly, on the days that he still tweeted, we still had red days. I think the first day he started tweeting, it went on a GME, went on a massive run-up. It nearly touched the all-time highs, and then it come crashing back down. And now this week it's on the move upwards again. So in case you've been living under a rock, you'll notice that Roaring Kitty, aka Keith Gill, he put out his position on, I believe it was Sunday, 2nd of June, and you saw in pre-market on Monday, GameStop was up over 100%. I think it went above $40 in pre-market. And it gradually came down throughout the day of Monday. Still closed up on the day, and then we had a red day on Tuesday, followed by a green day on Wednesday yesterday. It was up 18-19% yesterday. The attention on GameStop is back to where it was in 2021. It's been trending all over Twitter, all over the internet, and I think this is really all of the past, all of the shorting, all of the manipulation. We're talking about one of probably the most manipulated stock in the history of the American stock market. That goes for AMC as well. And this has created massive pressure. This is it's like a time bomb waiting to explode. I think hedge funds have papered over the cracks, and now we're reaching to a point where if the price keeps going in this upward trend, this water pipe's going to burst, and if it breaches $80, it's uncharted territory. There really is no limit on how high this can go. Now, I think, there is definitely potential to make some quick money and ride the wave upwards on, a short-term play, but make no mistake, GME is a long-term play. We're talking about a company that has $2 billion cash on hand. They raised an additional $1 billion a couple of weeks ago, during that last run-up after Rowan Kitty started tweeting. I mean, we're talking big money here. We're talking about a video games retailer with $2 billion on cash. Now, we have a CEO that's transforming the company from a standard video game company to a company that now is authorized to invest those $2 billion of cash into assets. Now, what they do with that is completely up to Ryan Cohen and the board. The potential for where this company is going, with one of probably the most loyal shareholder base in the entire history of the American market. You've got retail investors that have held their shares for over 3 years when they could have sold them for a profit, but they've stuck onto it because they believe they could get more. They've kept onto those shares when it's plummeted in price, been in the red now for like a long time. And now a lot of those long-term holders are starting to see green. They've averaged down. And really now I think a lot of people are angry. People are like, I've gone through these 3 years because people got into this not just for a quick bit of money. People got into this because there's potential for real change, expose the financial system in the US as how it's fraudulent, how it's manipulated, how hedge funds have basically got the cheat codes to rinsing the average Joe from his pay packet. I mean, you look at CNBC, you look at Jim Cramer's show, he says that, retail investors, you need to buy this stock. What happens next few weeks? It plummets in price. How is he making money? His hedge fund pals are short on the stock. Now, that's completely legal in the eyes of the law today. And I do recommend watching a video on Jon Stewart's Daily Show from, I think it's back in 2008. He interviewed Jim Cramer. And he put out a clip where Jim Cramer was explaining to one of his interns when he was a hedge fund manager. He was explaining how hedge funds go short on a stock and how they make money of this and how they essentially prey on companies, American companies that are going bankrupt. And bands of hedge funds, not just one hedge funds, will get together, focus on a company to take out of business, and they'll use illegal tactics to short that stock into essentially oblivion, and they get the big payout when it goes bankrupt. So that was what GameStop was back in 2020, but it's a different beast now. GameStop had poor financials in 2020, pandemic. They saw GameStop as an easy target, but where we're at now, GameStop is completely transformed. We've got a company where 25% of all of the shares are directly registered by retail investors. That's never happened in history. And what does that mean? It means that the stock is a lot more illiquid. It's more difficult for short sellers to borrow shares now, because if the shares aren't in your typical brokerage account, it means that the broker can't lend out those shares. So when there's a lot of illiquidity, it's more difficult to short the stock, and which means that we're going to see a lot more volatile price action now. So I think something else to point out as well, we saw a 19% move upwards on GME yesterday. There was no tweet from Rowan Kitty, no updates on his position. So what does that tell you? I mean, the massive amounts of volume that you're seeing on this stock is not retail. What we're seeing hedge funds trade between themselves to keep the stock under control. But each dollar this stock goes upward, it makes it more difficult for hedge funds to keep their short positions from being liquidated. And where is this going to go? I mean, cost to borrow shares is at 8.8% at the moment, making it more expensive to short this stock. I've got this really useful link in the description actually to look in more detail, but here's the latest edition of the Superstock Times shared on Reddit, so all credit to the original poster. There's a link down below, but I'm just going to briefly have a look at this and talk through the main details. So you'll see here with the call options in June 2021, there's 6.5 million uncovered shares if exercised at a $20 strike price, and this is expiring on June 21st. 10.3 million at a $25 strike price, and 13.9 million at a $30 strike price. So if all contracts were exercised, that would account for 26 million shares. Now, there isn't 26 million shares to pay out if these are exercised. So this is what's forming a gamma ram. This is what, if Roaring Kitty exercises his options at these prices, it could set the trigger on this short squeeze. I think January 2021 was the baby short squeeze. I think we're leading up to a cataclysmic short squeeze. I mean, this is going to be a nuclear bomb of a short squeeze if all goes to plan. I think we're literally seeing history unfold day by day, and I think this will go down as one of the craziest stories. I think the film doesn't even touch on the true picture of what's gone on here. There's layers and depth to this. I mean, Roaring Kitty's got his position from a 50k initial investment to over 300 million value on paper, US dollar, in shares and options. My personal price prediction, I think by the end of June, I think we're going to see it above $80, and where it goes to next from there, I think is uncharted territory.